What's up, traders? Over here with the Dark Side team, and in this video, I want to talk to you guys a little bit about correlation. Now, it's not something that I hear too often anymore, but definitely I'd say probably about 3, 4 years ago, there used to be a lot more talk about it. I don't know if maybe somebody with the most followers at that point had mentioned it, so therefore that became the trend, or I don't know, maybe the right person said it, but I remember hearing it a lot more often. I don't really hear it as much anymore, but it definitely still plays a significant role in my analysis. Now, just like anything else, okay, just like anything else when it comes to confluence, I take it with a grain of salt. In other words, it's not a big part of my analysis because nothing really is. It's more of just another ingredient in the overall recipe, if that makes sense. Like, in other words, every confluence that you create, or every check mark that says yes, you should take this trade, every one of them is only important as the next one. There's nothing to me that's more important than liquidity overall. So, understanding correlation, that's a part of it, but it's not everything. Understanding an order block, part of it, not everything. Understanding Fibonacci, trend line, demand zone, support and resistance, all of that, just they all have their own little piece in the puzzle. They're all their own little ingredient in the cake, if you want to think like that. So, and that's the same way correlation is. Now, typically you guys should know by now that I mostly trade the majors, those are the USD pairs. The main reason I do that is because they give me the best spreads, they give me the best swap fees, and I live in the US, so it's convenient for me. Nothing makes these pairs more special than any other pair. It's just what I happen to trade. But for me, I use the dollar index a lot, and as you can see right here, the U.S. dollar currency index, the DXY. What this does is it kind of helps give me an idea of what to expect on most of the majors, along with gold as well, and along with GJ too. If you look closely at it, you'll be able to understand the correlation between the dollar and pound Japanese yen. But for those who aren't really familiar with the term correlation, what it is it's basically the idea that if the dollar is moving, and just this example, this is live price action, if the dollar is moving bullish, then pairs that follow the dollar should move the same direction. What pairs would those be? Those would be UJ, because that's dollar, Japanese yen, USD CAD, right? United States dollar versus the Canadian dollar. That's another pair. What else? U Chief, I call it, which is USD Swiss franc. Those pairs would all follow the dollar because they all start with the dollar, the dollar, the dollar. So if the dollar is moving bullishly, we'd anticipate, not automatically think, but we would anticipate that UJ, UCAD, USD Swiss franc will probably move in a bullish way as well. But they don't have to do that, guys. Why? Because don't forget about the Japanese yen, the Canadian dollar, the Swiss franc. They also have an impact on the US dollar. Now, although the US dollar, in my opinion, is far more powerful, and the fact that most of the time I like to think of the US dollar as being in the driver's seat, we can't forget about the passenger. We can't forget about the yen, because when you're driving, the passenger can influence a lot of what the driver is doing. Okay, so never let it get too deep, to where you just forget about it and you're just following, the dollar's long, I'm going to go buy UJ. Don't do that, because the market is going to humble you very quickly. The last thing we need to think is that we just found a holy grail by looking at the dollar index, and that's going to predict what's going to happen here, because, guys, by this time you understand the way this market works. Nothing, nothing is more important than the other. Okay, so adding this to your overall analysis will be powerful. And again, I'm trying to give you guys things that'll help you regardless of the way you trade. Whether you trade smart money, supply and demand, Fibonacci, trend lines, harmonic patterns, RSI, any of that, it doesn't matter, because these are the type of things that are going to help you at least have a good overall idea. And remember, guys, direction is much greater than speed. You want to make sure you're heading the right way in the market. Everything else is irrelevant. Okay, so when it comes to understanding these things, right, you've got to consider it. Like I said, it not as more important than anything else. It's going to help you once you start to backtest and understand, and it'll also help you a lot with news data and things like that, because a lot of times people don't even consider this stuff. But when there's a big USD announcement that's getting ready to come out, a lot of times you could just come over here and look at the dollar index, and it'll give you some really good clues. And I made a video about that probably like 6, 8 months ago. about how to anticipate news and what to expect during things like NFP, interest rate decisions, CPI reports, all that kind of stuff. And it was largely circulated around the dollar index. If you go back to that video, definitely good. And even those predictions made in that video, high time frame dollar, it's still following to this day. And I think that was 8 months ago. So if you watch that, then good for you, man. But just to get back to this, you got to understand that if the dollar's moving up, we also have the inverse pairs, like what? Like GU. Okay, that's an inverse pair. What's another inverse pair? EU. And what do I mean by inverse? I mean that the dollar is now in the passenger seat. The dollar is now sitting shotgun. It's on the passenger seat. However, the power of the dollar still has a huge influence on GU, on EU, on any pair that the dollar is related to. What's another one? AU. AU becomes a little bit more challenging because obviously you have the dollar correlation to the US dollar, and then you've also got the correlation between gold and the Aussie dollar. So it gets a little confusing there. But again, that's why you can't just spend your entire time trying to figure out, all right, well, if gold is going up, that means the Aussie's going up, but it says the dollar's going down. Then you just confuse yourself. You don't even realize what's going on. And then you're manipulated and left hung to dry so quickly that it's not even funny. So when you think about it like this, if you see obvious dollar bullish price action, in this particular scenario, just to give you guys a little clue, if you look at the sweep collection to the low, you have this zone up here that should be hit, potential equal highs right there. So it makes sense for what? The dollar to continue to the upside for right now. So what would you maybe consider looking at? You'd maybe look into GU and say, maybe GU should be starting to head down. Maybe EU, AU, they should all be starting to head down because it looks like the dollar index is going to be bullish from about here to about here. We call this what? Space and opportunity. So maybe the dollar is going to be bullish. And again, guys, you cannot go and open up your GU chart and just start looking for sells. You can't. Instead, you want to approach your chart with an open mind. You want to see, does a sell opportunity jump off the chart and scream in your face, sell, sell, sell? Because then maybe there's a real opportunity there because now you can actually correlate the two. You can say dollar short, came down, dollar retracement, dollar's bullish. So now if you see a clear sell on GU, that just gives you what? Remember those check boxes I told you guys? Remember, guys, positive things and then negative things towards your trade. So if the dollar looks bullish, GU looks short, that's what? That's a check mark on the side. That's a pro confluence. That's something that looks good for your trade. Okay, and remember, we always want the pros to outweigh the cons. If we have 4 really high probability scenarios versus 2, that gives us a greater chance of being right in our trade. And that's what it boils down to, guys. Probability and giving ourselves the best edge, the best odds in the market. Correlation helps with that. You understand what I'm saying? But you can't build your entire trading career off that. Just like you can't build your entire trading career off of smart money concepts. You can't build it off of trend lines. You can't build it off of supply and demand. You can't build it off of anything. It's got to be a beautiful harmony of everything. Again, it's just like a recipe. A recipe is several ingredients all working together for one taste. That's the same thing, okay, in trading. Everything together for one goal, which is to be on the right side of the market. And at the end of the day, guys, the market's what? It's two-dimensional. It only goes up and it only goes down. It's really not that hard to be on the right side of the market, considering you only have a 50-50 chance. That's not that bad. But it's when we overcomplicate things is when we end up being right, but still being wrong by doing things like what? Too tight of stop losses, entering prematurely, subjecting ourselves to, less than ideal trading conditions, basically not being patient. So another little hint, guys, that a lot of people really don't use, okay? I'm sure a lot of you guys are familiar with the US dollar index, okay? And what did we say? Potentially, we said potentially based off structure, right? Here's the structure, higher, lower low, lower high, lower low. We figure collection of liquidity, potential upside, potential, because we're not going to assume anything, right? We're going to go with the flow. So if we're seeing potential upside for the dollar, we can look at something else, which is a huge impact in the market as well, another big global currency, which is what? The euro. Okay, so we can go to the euro index. A lot of people don't even know this exists. But the euro index is just like the dollar index. It's going to give you a really good idea of what to expect from the euro. Now, again, you can go and correlate this how? Who's in the driver's seat if we're looking at the euro? That would mean the euro is. So you can look at pairs like what? EJ. You can look at what? EG. You can look at what? ECAD, right? You can look at a big one, guys. EU. Hint, hint. You can look at EU. And imagine if we just spoke about the dollar, right? We just said that the dollar looks like, let's go back to the dollar real quick. We just said that the dollar looks like it's got potential to push to the upside after this collection of liquidity, or the sweep or break of structure, whatever you want to call it. Doesn't that mean that if we look at the index, okay, let's go to the euro index. We were saying dollar wants to push to the upside. Okay, now let's look at the euro index, all right? And we look at the euro index, and it's, wow, it's kind of suggesting what? It doesn't matter what strategy you trade here, guys. The euro index seems to be suggesting downside, doesn't it? I mean, if these are structural swing points, I hope you're seeing structure this way. And this is the sweep that I hear, and this is where the dollar or the euro seems to be heading. That's the complete inverse of the dollar. Now go and put those two together, please, without me having to explain it anymore, and you can easily see which way EU, okay, which is an easy pair to trade, usually very low spread for everybody, very low swap fee, but it gives you a really good idea of what to expect for EU. Okay, and then again, if you're looking bearish, if we're looking bearish on the euro index, which we're looking at right now, so you could just draw a little thing on your notes, euro's looking sell. Now what do? Go look at your watch list. Go look at your pairs that you want to trade. What did I tell you in the previous video? How do you pick pairs that you should trade? You should pick the ones that have the least amount of swap fees and the best spreads for your particular part of the country. So EJ might be a lot more, practical for you to trade, a lot more lucrative for you to trade compared to maybe euro pound, depending on where you are, or maybe euro Swiss franc. Because for me, euro Swiss franc has a spread of about 20 to 30. No good, especially during the swap hours, when EJ has maybe 5 to 8 pips. Much better. So for me, this is nothing that I would ever even consider. But again, what I'm trying to say is if you have a good idea of what to expect from the euro, okay, because it's giving you obvious signs of a continuation to the downside, then you should maybe go look at the pairs that are most lucrative for you and look for euro shorts, right? Look for euro shorts because it's saying that the euro should pass and push to the downside. So if you go over there and you look at EJ, and EJ looks just like this. EJ is sitting right here in a zone, okay? It's just about to hit your imbalance, your order block, your 61.8 Fibonacci level, your trend line, your support, your resistance. Again, it doesn't matter what it is. It doesn't matter how you trade. But if it's about to hit a zone that you feel is potentially going to change the direction based off your own view and perception of the market, and the euro index suggests downside as well, that's what, guys? That's another check, okay, in the positive side. That's another check in the right direction towards you justifying a position in the market, okay? And again, it doesn't matter what it is. This can be support turn resistance right here. This could be 61.8 fib. It could be the trend line. It doesn't, or it can be an order block. It doesn't matter. But the idea is that your analysis is suggesting a potential for price to change direction and push down. And when you look at the euro overall, it's looking like it's going to continue to push down. That right there, that helps them work together and create a strong bias for you guys. You see? That's why strategy, none of that shit works. It's so much bigger than that. Sometimes you got to just take a step back and think about these things. We've got to use what we can to our advantage. Okay, I've spoke about this many times before. When it comes to trading, there's so many things that we cannot control. But the things that we can control, we need to take full advantage of. Why would you not be looking at, basically a good way to predict what the euro's going to do next if you're going to trade any euro pair? I mean, why would you not want that clue or that hint at what to expect? I mean, all we have is clues and hints. We need to take full advantage of them, guys. Forget about strategy. Forget about following the rules. You've got to learn how to make it work for you. A lot of people talk about manipulation in trading. Manipulation is not a bad thing. You have to learn to manipulate the market to work for you. You have to learn to manipulate your strategy to work for you. Just the other day we were talking on our team about. I was talking with one of the ladies on our team, and I was making the comparison to trading and poker. And if you figure poker, which is a card game, 52 cards in a deck, right? 52, 53 cards, whatever it is, in a deck. So every time the people get dealt their cards, it's completely random. It's completely random. There's no way that you can predict your cards. It's random. But yet when you watch the World Series of Poker, it's the same people that are winning every year. It's the same handful of people that are the stars of the sport. And you say to yourself, how the hell can they be so consistent in a game of chance and a game of random cards that are given to them? Because they focus, guys, on the things that they can control. They can control certain things like what? Like their opponent. Okay? They know how to manipulate, right? They manipulate their opponent by doing what? They bluff. They make you think something that's not really there. And what does that do? That allows you to be controlled. Okay? That's what manipulation is. They learn how to manipulate the cards to work for them. You need to understand how to manipulate the market to work for you. And following rules and strategy, unfortunately, guys, it's almost the opposite. It's you're if those guys, when they play poker, right? They wear the glasses that cover their eyes so that nobody can see what they're doing. Nobody can see what they're doing because they don't want anybody to know their next move. Okay, dark glasses. But a lot of our traders, okay, a lot of the guys who are trading smart money and stuff like that, to me, they're like clowns because they're wearing mirrors on their glass. They don't even have sunglasses. They have mirrors on because they're showing the market what they're going to do. They're showing their hand because they're following rules. They're following rules. So the market knows that if you see a break of structure, it knows that you're going to sell right here because you have on mirrors and the whole world gets to see your hand. And you wonder why you get manipulated so bad because you're getting manipulated. You're not the one doing the manipulation, okay? That's what we're doing. That's what you guys got to learn to do. Make things work for you. No strategy is ever going to outsmart the most fucking impossible algorithm in the world. And thinking that you're going to follow rules is just, again, guys, it's a slow and painful death. But and that's a whole nother video in itself. But again, just focus on correlation. And right now things seem to be working a bit well with that. Things change all the time. The market's continuously evolving. I've seen periods where the dollar is doing this and UJ is doing this. And you could say, well, maybe the dollar's not driving at that point. It's the Japanese yen. Again, when it's not working out like that, that's when I leave correlation off to the side. Just like any other confluence of mine, I focus on them when they are working because why would you focus on them when they're not, right? So I hope there's something you guys can take away from this. And of course, make sure you're following our Telegram. And we'll talk to you